Welcome back, everybody. I'm Jeff Barton for the Mortgage Minute, and welcome to the show. We're on LinkedIn, Facebook, a number of other social media outlets, if they're on and up and running today. Anyway, let's get right to some of the things that I wanted to talk about quickly. Inflation, the stock market, 20-year mortgage. 20-year mortgage, that's an interesting concept to bring more housing to low-income people, especially first-time home buyers. It's really where the federal government steps in and pays a good deal of the down payment to make sure that the monthly mortgage that you're going to pay is actually something that you can't afford. There are no details. It is a preliminary look at it, and also maybe it'll happen. I don't know. A lot of people are against it, obviously, but I'm one of those people that think, look, if we're going to help people get into housing, we either got to build more houses or help them financially to get into the house that they need. And I think home ownership is the way to increase wealth in certain neighborhoods and families and certain communities, and that's a good way to go. The interest rates today, 3.09 for the 30-year fixed, 2.49 for the 15, 2.75 for FHA, 3.10 for that jumbo. You know, that jumbo rate, even though other rates have been going up and down, and the 10-year as well, they have remained pretty steady. I think that market for the jumbo market is a private equity market anyway, and I think a lot of that is bought and sold on the private market. So a lot of the Fannie and Freddie realities to the conforming loans don't really affect jumbo. That's why the rates are what they are. Let's see, the 5-1 is at 2.75, and as I said, the 10-year is at 1.51, which has been increasing. Everybody knows. We talked about it yesterday as well. The 10-year is really how we look at what's happening in the mortgage rates and whether the mortgage rates go up and down. I do think they will go up. I do think we will see the Fed raise the short-term interest rates from their discount window as well. And I think all of that is going to happen sooner than later. Inflation is not something the Fed is used to really playing with, although, you know, there are arguments either way, and I'm not an economist, but I can tell you that Americans understand when prices go up really well, and that affects their pocketbooks, which in turn affects who they're going to vote for. So I think the Fed, either by political pressure or by pressure from their internals. And by the way, the what's going on at the Fed with the accusations of insider trading, it's really a mess over there. Why is it that greed really affects most people most of the time? I don't know, but it is true, and that is what's driving the investigation over there. And if you're watching anything, watch to see what happens to those two who have decided to retire early or resign their posts, and who gets appointed. We had some political opinions that said that the people who will get appointed to the Fed board will probably be more dovish as opposed to hawkish, meaning that they would like stimulus to last rather than to be curtailed. Price growth slows. Yes, the affordability index is still difficult, but we've seen the 20% year over year. And by the way, Austin, 45%. That's how much prices have increased year over year. 45% in real estate in Austin. Now, I love Austin and I love Texas, but it's rare to see that kind of, almost half of what you paid last year, you're going to add it on to what you got to pay this year. That's pretty incredible. Lots to talk about there. Let's see. The CFPB director, he comes from a long line of people who like to regulate. And as the quote says, regulation by enforcement, meaning that you really don't know what the stance of the new CFPB is going to be until they, impose some regulatory action against an actor. It was that way before Trump came in. I must say that the Trump years were very kind to mortgage brokers and real estate professionals. So we kind of lament the fact that this new guy, Rohit Chopra, is going to take over, and he comes from a regulatory background. The media, what's happening at Facebook, what's happening all over the social media landscape, whether we regulate, whether we don't regulate, I think it affects borrowers in as much as it distracts from really what's happening. We don't see a lot of social media attention to what's going on in the economy, either through the Fed or through regulatory agencies. And the reason being is that most people just don't understand it. We try to give you some basis by which to understand it on this particular show, or on the radio show that we have on Facebook occasionally, but we'll put the radio show on YouTube. It's Jeff Barton, the Mortgage Voice, and we talk about a lot of these issues, but mostly it's the mundane, what's available now, what products are available, what rates you need to get, and how much money you need to have in order to get that type of product. Let's see, that's about it. There's a lot more to talk about. We'll get to it probably tomorrow. I'm Jeff Barton for the Mortgage Minute. We'll see you next time.